Welcome to America's Commercial Real Estate Show, your source for intel, forecasts, and success strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by BOMI.org. That's B-O-M-I. Check them out. They have the industry standard for training for facilities and property management education, BOMI.org. Well, today we're going to talk about the hotel industry, the hospitality world. It's a great sector. You know, you think about hotels, it seems like they call industrial the sexy sector. Well, hotels have always been the sexy sector. You know, think about the resorts and the casinos and the nice hotels and the day-to-day rentals. When someone doesn't pay, they're out, right? Well, let's get the latest today on the performance of hotels, what we've seen last year, 2018, what to expect moving forward in 2019, and also what could impact the hotel industry moving forward. Please welcome my guest. It's Mark Woodworth, and Mark is Managing Director with CBRE Hotels America Research, and he's here in Studio One. Mark, good to see you again.
Michael, thanks again for the opportunity, and I'm glad that you find a little part of a commercial realty space that we occupy so exciting and attractive and vibrant and bubbly and whatever the other stuff you said. So
yeah, I said sexy.
Oh, sexy, that's what it was. Okay.
Yeah. Well, we started a hotel division about a year ago, and we're selling hotels, and I think it's awesome. It's a great sector, and so I'm always curious. I've heard you speak for years, and respect what you do, and I appreciate you being here.
Yeah, well, thank you.
So let's look at 2018. It looks like the economy's been good. It looks like we've had. It doesn't seem like we've had too many new hotels. It seems like everybody's been building multifamily, right?
Right. Yeah.
So what happened in 2018? How's the performance been? I know it's the end of December. It's now January, the first week of January as we tape this today, and I know all the 18 numbers aren't in, but what have you seen?
Well, and I hate to sound like the consultant that I am, but the answer begins with it depends. Mm-hmm. We had a record occupancy. Never been better. And again, you know, in our part of the world, we talk about occupancy. Everybody else talks about vacancy. Yeah. It's never been higher than it was in 2018. That's clearly good news.
And what number was that percentage?
Just north of 66%.
Okay.
And I think an important benchmark there is the long run average is about 62.
Okay.
So we're well above what an average or more typical year would be in terms of occupancy. We continue to see some challenges on the pricing part, operators being able to get good gains in pricing. Mm-hmm. But profitability levels are extremely high, and so their cash flow is very good. We've been saying for some time now, look at the lodging space as a place where you can get some very attractive dividends, as opposed to necessarily getting really attractive year-over-year gains in the value of your investment, appreciation, and so forth. So we don't really think that there's any threats to that, what we've seen really for the last 3 or 4 years now, for at least the next 2 or 3 years, meaning very balanced relationship between the increase in supply and the amount of new demand that comes into the vast majority of markets, and the fact that revenues will continue to increase, albeit somewhat modestly. The biggest challenge we see, and we think when the numbers come in for 2018, understanding that half of the cost of actually running a hotel is labor and employment.
The people.
And so, as you know, and unemployment rates being so low, labor is scarce. Therefore, the price of that labor continues to go up. In the hotel space, it's been at twice the rate of inflation now for the last couple of years. So there's a lot of downward pressure on bottom line growth. But again, in terms of, you know, will we continue to sell record levels of rooms? Is supply going to grow too fast for the demand to keep up with it? The answer is absolutely no. We feel, in fact, in the almost 40 years now, Michael, I've been doing this kind of thing. Started using a word I've never applied in the lodging space before, and that was durability. You know, we think it's a very durable profit stream that we're looking at for at least the next couple of years.
Well, let me ask you, if rates have been fairly, well, you didn't say flat, but it hasn't been a lot of increases in your daily rates or the income,
right.
And you've seen increases in expenses, especially on the labor side. Does that mean profitability has been flat, or?
It's been in the low single digits, which in the remarkable thing, I don't want to get too far into the weeds today on this, but If we think about record occupancy levels, which means technically it's been harder to find a hotel room than it's ever been, you'd think scarcity, therefore, would be put the ball very much in the seller's court.
Right.
But again, there's been some unique things going on in the lodging space this particular cycle. The introduction of the intermediaries 10, 15 years ago now, think of the Pricelines, the Expedias, and so forth, and the fact that hotel owners and the managers that they employ have come to rely very heavily on those intermediaries, and those intermediaries are extracting a pretty significant price for bringing that piece of business to the hotel. And so that's affecting the net average daily rate that the hotels are reporting to people like us that then use those to forecast the future.
And what do you expect for new supply moving forward, Mark? It looks like, in most sectors of commercial real estate, supply has been rather limited, except for maybe multifamily.
Right.
But with construction costs rising so much, what does that portend for the hospitality world? Does that mean less new supply and good times for hotels because of lack of new supply?
Certainly much less new supply, new construction than one would expect, again, given how long and how well the industry has been performing. Depending upon where you sit in the hotel space, you're either happy or sad that there's been all this demand for construction materials, labor, land, et cetera, coming because of multifamily. We're here in Atlanta. We had the unique circumstance as we were coming off of the depth of the Great Recession. We had 2 professional sports stadiums under construction at the same time. So the idea being the competition for virtually all of the inputs to the development process is one of the factors that really kept hotels from doing what they historically have done, and that is to overbuild. We just don't see that. We're just getting back to long run average net supply change in 2018. And again, our forward-looking view doesn't expect to see much of a change going forward.
Okay. And how about the different types of hotels? Do you see any variances there on performance last year, and then what you expect moving forward?
Well, do you want to talk about the really nice hotels or the kind of hotels you like to stay in? Just kidding.
Yeah, those resorts and mountaintop beautiful resorts,
There
that's
you
where
go.
I like to stay.
It's a bit of a barbell view today, in that the really high-end and the lower-priced hotels have been outperforming the industry averages. So you have luxury, certainly resort locations that are, as you know, are often dominated by the higher quality, higher priced assets. They have been doing, again, outperforming the average. Part of that is because if you think about that 80% that falls in the middle of the bell curve, on average, those hotels are fuller than they've ever been. And i.e. they're selling out more nights of the week, more weeks of the month, more months of the year. And as you know, if you're full, you have no more units to sell, you can't grow your business other than increasing the price. So we've seen that happen.
What do you see for events?
Events in terms of?
Events for, and what do you call it in the hotel industry, the event space, the
meetings and conferences and so forth.
Conferences, yeah.
It has come back nicely. There remains a lot of concern about is it actually fully recovered from what we saw really pre-2008. So that's something that we've been watching very, very closely. The availability of data is a little bit spotty, so it's hard to get real comfortable. But we've just begun to dig into some research around the idea of uncertainty and how does that affect hotel room buyers' behavior. And one of the things anecdotally we've learned is that, and it kind of makes sense when you start to think about it, that if you're a meeting planner and you're representing Bull Realty or the National Association of Home Builders, or pick the tens of thousands of companies and organizations that exist, the more uncertain you are about what your future holds. I mean, the natural human response would be, if I don't have to make a decision now, let me postpone it till I feel a little better about what the future holds.
Right.
So in the hotel world, what that means is that hotel managers are finding they've had more inventory available on their books for longer periods of time than what they used to, because meeting planners are not booking as far in advance as they used to. So it's like anything else, the longer it sits in inventory, the less valuable it is, and therefore the more willing you are to move that inventory at a discounted price to get it sold. And again, that's one of those things that's been hurting the even though we got high occupancies, it's been hurting the year-over-year increase in prices.
Yeah, well, that's interesting, because it seems like businesses and small businesses have been pretty confident about the economic environment and the economy moving forward. So what do you guys expect moving forward into 2019 and maybe into that what sounds like far away 2020, right?
There you go. Yeah, could be. 19 is looking really good. Again, this whole question of uncertainty is certainly elevated.
Yeah.
I mean, tariffs, no tariffs. You know, indictments, no indictments. It's a long list of things that is really difficult to gauge and even handicap what the outcome might be. But the economic fundamentals and the advanced booking data that we've seen indicate that 2019, where we are today, this should be yet another really good year. In fact, our forecast, which we released about, I guess, a month ago now, for 2019 calls for yet an even higher industry-wide occupancy.
Nice.
We think things generally will be flat in 2020. We do expect some economic weakness to set in the back half of 2020. We'll probably really feel it in 2021. But we're really characterizing it, Michael, as an industry slowdown as distinguished from an industry downturn.
Industry slowdown, in what way?
That we will probably see a point and a half decline in industry-wide occupancy levels.
Okay.
We'll see price increases in the 2.5%, 2.8% range, such that overall revenues are going to continue to go up. We talked a little bit earlier about the expenses increases and so forth. That will persist well through 2021, such that we could see the average U.S. hotel have a year-over-year decline in profitability. But again, not like what we've seen in certainly the previous two downturns of 2001 and 2008.
Yeah, okay. Well, we're going to take a short break. When we get back, I want to ask you, Mark, about cap rates, what you expect moving forward, and maybe where there's some opportunities in the market. For Stay With Us, I'm Michael Bull. This is America's Commercial Real Estate Show. We'll be right back.